Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. We are live from the CNBC-TV18 Motilal Oswal studio. For the markets today, below that 25,400 mark, in the red, midcaps falling a little bit more, and all eyes on TCS results today.
That's right. Good afternoon, Sonal. Like you said, all eyes on TCS results. Earnings season kicks off officially, and a whole host of results over the next month and a half is what we look forward to. It's a red screen, advanced decline ratio, quite weak today. But we have a lot lined up on the show, so let's start off with the top headlines. Stocks still down on hopes of an early mini trade deal with the US are fading. Realty and metal gain, while IT, pharma and healthcare drag. Mid-caps in line.
Housing finance companies in focus after Bernstein initiates coverage on multiple stocks like Home First Finance, Aptus, Value Housing Finance, Aadhar and PNB Housing. Brokerage firm expects Home First to benefit from faster growth compared to peers and Aadhar to maintain its steady growth trajectory.
Flair Writing gains in trade after a buy recommendation from Ambit. The brokerage firm adds that management expects demand recovery in both domestic and exports, with growth acceleration seen in FY26.
CNBC-TV18 learns that Finance Ministry may create a 32,000 to 35,000 crore rupee fund to compensate oil marketing companies for LPG under recoveries. A cabinet proposal may soon be moved for the same, offering big relief to IOC, BPCL and HPCL.
IREDA rallies as the government allows it to raise funds via capital gains bonds, which allows for a lower interest rate and tax benefits for investors. Q1 results scheduled for later today.
Those are the top stories that we are tracking. We'll discuss some of them in greater detail as well. For the markets, it's an 85-point cut on the Nifty as we speak, very close to that 23,400 mark. We'll have to see whether it sustains around that mark or we fall further from these levels. Bank Nifty down 0.2%. We do have the mid-cap index, which is falling a little more, 0.5% gone there. Even the small-cap index, that should come up for you on the screen, and that one is falling in line with what the mid-caps are doing. Both these indices at the day's low. So some impact that we're seeing on the mid-caps and the small-caps. Now, do remember, this was one index which was not, most of the markets actually was consolidating. But today, mid-caps in particular seeing a sharper cut.
That's right. One particular pocket of the market that's seen accelerating seller pressure is actually the defense pack. They've done very, very well. But today, some of those stocks, especially names like Bharat Dynamics, BDL and BEL, some of the stocks that are taking a bit of a knock today. But these stocks and a whole host of other stocks is what Hormaz has on his list. He's standing by the wall to take us to the mid-caps that are moving around in the session.
Sharper cuts on the broader markets, and you start off with the losers then in today's session as the index has slipped to the lowest point of the day. Metropolis is one of them among the top losers on the Nifty 500 today, 4% lower on that stock. And some of the financial names, look at Canfin Homes, look at RBL Bank. Of course, RBL Bank is in the F&O ban, but seeing some unwinding today, 2.5% lower on that stock. As Vivek just mentioned, defense is one pocket that is not doing well in today's trading session. Bharat Dynamics saw an initiation note coming in from Motilal Oswal, and some of the other names like Zen Technologies, Data Patterns, they too not having a good day in the office, losses of around 3 to 5%. Bharat Dynamics has in fact now slipped to the lowest point of the day. Some of the other movers in today's trading session, and they are the ones that belong to the asset management space. And before we get to that, some of the brokerage reactions. Look at Flair Writing. Ambit came out with a note on that stock. PFC, the initiation coming in from Morgan Stanley, remains a consensus buy among analysts at the highest point of the day. And Home First Finance at one point was up 6%, has given up most of those gains but still holding on in the green. Volume buzzers in today's session. Some of these names, Campus Activewear has been holding on to gains today. Acme Solar is at the highest point of the day, 9% higher on strong volumes, as is Glenmark Pharma, gains of 3.5%. I just spoke of asset managers, and UTI AMC is already at a 52-week high. A note came in from Antique a couple of days ago and from ICICI Securities today as well. And Nippon Life, HDFC AMC and Aditya Birla Sun Life too seeing healthy gains in today's trading session, even after the markets are slightly wobbly. Back to you guys.
All right. Yes, some pockets which are wobbly. Thank you so much for joining in with those names, Hormaz. Let's now welcome Nagraj Shetty of HDFC Securities for a quick technical check on the markets. Thank you so much for joining in. What are the important levels you're watching out for? Do you think we could see a further fall, or we could get back above that 25,500 mark?
Hi, good afternoon, Sonal. Market has been in a range-bound action over the last few sessions. We have seen 25,550, 600 the upper range and 25,300 odd levels at the lower range. I'm not expecting a bigger decline as of now, even though market has some cut from the higher levels. There is a possibility of Nifty bouncing back from lower the support of around 25,300 to 25,250 levels in the short terms, and eventually we could see Nifty retracing towards around 25,550, 600 levels in the near term.
Good afternoon, Nagaraj. Nagaraj, what are the individual stocks that are on your radar? Any buy or sell for our viewers today?
Hi, good afternoon, Vivek. I have two buy side from my side. One is PCBL. PCBL has witnessed some decisive upside breakout of the range action as well as the downsloping trend line in the last couple of sessions, looking attractive at this point of time. And that breakout has accompanied with a rise in volume as well. Currently trading around 432, 433 levels. One can look to buy at this point of time. Immediate target would be around 455, and one can place a stop loss at 420. Second one is from VIP Industries. VIP Industries has been in a gradual up move with a bullish setup, like higher tops and higher bottoms over the period of time. Recently, it has shifted into a range-bound action, and the last couple of sessions price action is signaling a breakout of the range movement. Currently trading around 449, 450 levels. One can look to buy at this point of time. Upside target would be around 475. One can place a stop loss at 435.
Okay, all right. Thank you so much, Nagaraj, for joining in with those picks and some important levels to watch out for on the Nifty. With that, remember to tune into the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Mid-Cap Radar. Well, the selling pressure continues as far as the mid-cap and small-cap end of the markets are concerned. But one particular sector that's in focus and doing relatively better is the housing finance space. This is post-Bernstein note, and Bernstein today has initiated coverage on quite a few stocks within that particular space. Gaurav joins in with more details.
Well, as Bernstein is being a little bullish on the housing finance, specifically on the companies like Home First Finance, Aptus and Aadhar, because they have initiated a note with outperform rating in these stocks. Specifically talking about Home First Finance, it is their preferred pick even in this segment. And the reason being that they believe that the company has ability to consistently replicate its operating model across the multiple states. Other than that, company also have some benefits like smaller size, fastest growth, superior productivity, and as a result, they are actually being bullish on this stock. Other than that, for Aptus, what they believe is that they have high share in the fixed rate loans, and that is something which is actually pushing the stock, and it will also help the stock given that this is an environment where we are seeing rate cuts. Aadhar housing is also something which they are preferring, and the reason being that they believe that company is largest and the most geographically diverse place, which is actually helping the company in placing the company as a different player in this segment. On the other hand, we also have Aavas and PNB Housing, where they have initiated with market perform rating. For Aavas, they believe that the company actually lags its peers when it comes to yield and profitability for the company. And lastly, for PNB Housing, they actually like the business model. They believe that the small ticket loan diversification is a good thing, but on the other hand, aggressive expansion is something where they are cautious, and that is the reason they have initiated with outperform rating. On the back of this note, we are already seeing some traction coming up for all these stocks, and we are also watching out on how these stocks perform in coming days as well.
Okay, all right. So that space continues to be in focus. Thank you so much for that, Gaurav. Bharat Dynamics is the other one. It is in focus. There is a Motilal Oswal note on that stock. Ria is joining us with the details of this one. Ria.
Well, yes, today Motilal Oswal has initiated coverage on Bharat Dynamics with a target price of rupees 1900 and a neutral rating, and this is a 4% downside compared to yesterday's closing price. Now, the brokerage has noted that BDL's revenue has been hit in recent years, largely due to supply chain disruptions and also because of challenges in sourcing critical components, particularly from Russia and Israel. But now they say that these headwinds are beginning to ease out, and they expect a sharp recovery going ahead. In terms of the revenue, they're expecting a CAGR CAGR of about 35% over FY25 to FY28. Margins are also seen holding steady in the 24 to 26% range, while operating performance is also set to pick up meaningfully going ahead. EBITDA and PAT are estimated to grow at a CAGR of 64% and 51% respectively over the same period. Apart from this, the report has also highlighted a strong order visibility going ahead for the company. They have a current order book of about rupees 22,700 crores and a potential pipeline of 50,000 crores going ahead, including large deals like QRSAM and the upcoming emergency procurement orders as well. Now, on the macro front, the company is well placed to benefit from favorable defense tailwinds, including the rising global defense spends, growing exports of the Akash missile systems, or the ongoing collaborations with DRDO as well. Now, that said, valuations do remain a sticking point for the company, currently trading at about 70 times the FY26 estimated earnings, and therefore they do suggest waiting for better entry levels on the stock. Now, apart from this, a report from a Brazilian news agency, the Rio Times, earlier this week also revealed that Brazil has dropped plans to buy air defense missiles, which is the Akash missiles from Bharat Dynamics from India, and they are now negotiating with Italy for a more advanced missile system. And this is according to official government sources to the news agency. So on the back of these two news flows, the stock is trading with selling pressure almost 5% lower today.
Thank you so much, Ria, for joining us. Clearly, markets not taking kindly to the fact that the Brazilian order that the street was expecting may come in has not fructified as of now. But moving on, one stock that's doing quite well is IREDA. They report results later today, but an important development came by today morning. Gaurav joins in once again to tell us what's keeping the street excited.
Well, yes, there are two reasons for IREDA to be in focus. And the first one is that the government has allowed IREDA to raise funds via 54 EC bonds. Now, these are also known as capital gain bonds. And what is special about this bond is that with this, IREDA can raise funds with a rate as low as 5.25%. Now, these bonds actually help investors in a tax exemption status, and that is the reason these bonds are popular. But what keeps IREDA special in this movement and what keeps the momentum ongoing is that the cost of fund for IREDA can come down. Let's not forget that in FY25 we have already seen that IREDA has seen 20 basis point of cost of fund easing, and with this we may see some further easing even coming ahead. We already have 5 PSUs who are raising funds via these bonds in the like of REC, NHAI, PFC, IRFC and HUDCO, and IREDA joins this pack as a 6th one. Let's also not forget that there is second trigger for IREDA is the Q1 results. Now, from the provisional updates, we have already seen a strong set of numbers for IREDA. We have seen loan book growth at around 26%, while disbursement grew almost by 32% on a year-on-year basis. So that is also another trigger which is playing out. And as a result, we are seeing the stock is up in trade today.
Okay, all right. So Q1 earnings today. We'll come back to you for the analysis. Gaurav, thank you so much for joining us with those details. With that, we'll do one thing. We'll slip into a break. But before we do that, let's just quickly take a look at some of the stocks which are in focus. Gaurav just spoke about IREDA. Of course, that is in focus. Nykaa is up around 1.5% as we speak. Since the broader end of the market is under a bit of pressure, there are not many stocks which are buzzing the way they did yesterday and day before. But a couple of names which are in focus. The mid-caps continue to be at the day's low. We have Borosil Renewables, which is up 3.5%. There's JBM Auto, which is up 2.6%. Prestige Estates, after that stellar set of Q1 update, is also doing well. Some brokerage upgrades coming by as well. So keep these stocks on your radar. But for now, we'll slip into a break. As we do that, here is some good news for our viewers. India's business news leader is now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're still tuned into Midcap Radar. It's time to talk about the insurance space. Yash is joining us now with the June life insurance data. Yash, how did it look?
Well, the numbers have been mixed if you speak about the sector, but clear outlier in terms of being on the positive side is Max Financial Services. You look at the numbers on any parameter and they come out to be very, very strong. And what makes it even better is that these strong numbers in the month of June have come on a very strong base as well, which was June last year. To speak about specific numbers, June new business premium collection was up 21% on a year-on-year basis. The first quarter premium collection has grown by 22%. Total AP in the month of June has grown by 25%, retail AP growing by 22%. HDFC Life, modest growth on a strong base which the company had. So June new business premium collection has contracted by 6%. First quarter premium is up 15%. June total AP has grown by 8%. June retail AP has grown by 12%. ICICI Prudential Life Insurance, it's a weak growth for the company in the month of June. And what makes it a little difficult to digest is that it's come on a favorable base which the company had. So June premium collection has just grown by 4%. The first quarter premium collection is up 6.5%. June total AP has grown by 11%. And what has really dented the business is the individual business. June retail AP is down 10%. SBI Life, healthy growth on a strong base. June premium growing is contracted by 13%. First quarter premium grown by 3%. June total AP has grown by 10% and retail AP growing by 14%. Finally, for LIC, it's a weak growth on a modest base. So June new business premium has contracted by 3%, but the first quarter premium is up 3%. June total AP is down 9%. June retail AP has grown by just about 2%.
Thank you so much, Yash, for joining in and breaking down the life insurance numbers for us, the monthly numbers that have come in. Well, moving on, AMCs are in focus post an ICICI Securities note. Pharma joins in with more details.
That's right, Vivek. AMC stocks are flying away in trade today, especially UTI AMC, because that stock is sitting at a new 52-week high. Keep in mind that the note from ICICI Securities points out that there is a case for an increase in AMC multiples, and this is largely based on resilient as well as growing SIP trends. Other than that, they also allude to increased trend of commission rationalizations, mainly on account of the growing AUMs. So that is another factor that is driving this rating. Apart from that, they also believe that the companies could possibly benefit from higher consumer discretionary spends on account of income tax cuts as well as the repo rate cuts, and they could also possibly post higher growth from a new asset class of MFs, which is the specialized investment fund. As compared to some of the other capital market plays, the regulatory risk for these AMCs are much lower, and this is a very important point that they make. AMC stocks on an average since the beginning of FY26 have given an average return of almost 34%, and despite that, they say that valuations remain relatively well placed as compared to some of its peers, but the key risk here is of competitive pressure, so that's something that we'll have to watch out for. But nevertheless, they highlight that there is a case for valuation re-rating as far as AMC stocks are concerned. Resultantly, the stocks are higher today.
Okay, take that point. Thank you so much, Mamakshi, for explaining that note to us. Flair Writing, that is a stock which is surging in how. There's a note from Ambit. Ria is joining us with those details.
Well, yes, today Ambit has come out with a note on Flair Writing. They've analyzed the fourth quarter FY25 results of the writing instrument players, and they've said that domestic growth has been accelerated while exports have declined this time around. They've also highlighted that the management expects a demand recovery in both domestic and exports going ahead with growth acceleration in FY26. Apart from this, they've said that margins have been impacted across the board given the rise in competition, product mix changes as well as inflation in raw material. Apart from this, they've also said that with domestic and own branded sales now at 85% of the revenue mix and the addition of high growth segments such as creative and steel bottles, Flair's revenue growth has picked up recently, and going forward, sustained sales are expected to drive re-rating for the stock. They have a buy call on Flair Rating and a sell call on the competitor DOMS Industries, and resultantly the stock is higher in today's trading session.
Well, thank you so much, Arya, for joining us and telling us about Flair Instruments, that particular stock doing very well in the session. Well, if we could look at the life insurance names, some of the names clearly pose the data that just put out. There's been a sharp reaction. First up, he started off with Max Financial. That particular stock is doing very well in the session, near the day's highest point. In fact, LIC is taking it on the chin. That stock is now almost 2% lower, in fact, slightly more than 2% lower. HDFC Life, ICICI Prudential, all of these stocks reacting quite sharply. The other set of stocks that have seen a bit of a bounce back are actually the OMCs. So the oil marketing companies, especially IOCL. Earlier today, our colleague reported that there could be a buffer made as far as under recovery of LPG subsidies are concerned, and IOC now at the day's highest point. Some of the banks are under pressure. Look at names like Axis Bank, even some of the IT names, name like Infosys ahead of TCS results today under quite a bit of pressure. Infosys down almost 0.1% Again, that particular stock under a bit of pressure. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.